Now, this is the collecting thoughts section here. So the roadmap for the next 3 to 6 months is to stop loss, no, adding to a loser kind of thing, setups and categorized, scaling in. So the item number one is essentially looking at I was able to do this for quite a while, so I will do this from this day forward, no matter what. Item number one, which is stop loss and no adding to a loser. Why? Because I have about 200 prop firm challenges failures to demonstrate to a T that no stop loss and adding to a loser have consistently caused me to lose the challenges, which I've repeated the past couple of days. Even as I even it's like being addicted to cigarettes. You say you're gonna quit, but you just can't. Ultimately, what happens is if you abstain for the rest of your life, that's quitting smoking. That's how it works. That's how difficult it is. So item number two is setups categorized. So there are categorization. So essentially, scenario number one is trending down, right? This is a very, very difficult situation to. This is very difficult to trade for me at this stage. So what I look for in a trade is if I look for an inflection point at this point here, and then I would just write it up and allow it to trade. But here, it's difficult to do because I would recognize this point as somewhere here, and then I would get laxed into the trade until it reverses and it gets to this point, sometimes fast. On a candle by candle, on a small 2 to 3 candles from here to here can be sudden and abrupt and catastrophic. So that's scenario number one, stair step move down, okay? The other is a strong move down, which happens like this with small candles that are painted every minute, and that indicates a very strong tendency to just move that way. That's strong. But if it's choppy like this, it has the possibility of reversing on an instantaneous basis as it moves down. It can move up as well. So the third scenario is essentially just a single line within a single candle time frame where there's a parabolic move down. Reversals can be devastating, but it does happen. And drawdown can be equal moving up. So that's the concern I have when I make these trades. So there are 3 scenarios of trending down. That's how it works. Okay. And the other part is there's a checklist. Identify what the market is showing, trending down, trending up, or trending sideways. I've learned how to trade trending up and trending sideways. If it's trending sideways, wherever I get in, eventually it's going to go and be at that moment. And so there can't be a loss unless I have a size that's too big to withstand the downtrend. Trending is also a great is easy that everybody does. Okay, that's when the market looks like that's when novice traders think that they're geniuses because they're making money. It's purely they don't understand that purely the market is moving in the direction where their thesis has been and will be, because that's the definition of being a novice trader. Because novice traders wants the market to go up. That's what they do, or they sell and hold or something like that. So that's how novice traders get laxed into feeling like they know what they're doing. That's the market condition. So I'll describe the other two in a bit. So now these levels are, what I've noticed is that swing level is a multi-day trading based on support and resistance, certain breakout conditions that occurs, right? Certain breakout conditions that occur, such as interest rate changes or earnings or some sort of global macroeconomic news that occurs. And that is something that will be useful later on down the road when the returns that I get is sufficient to provide enough time for me to look into that. That's later. Now, there's another one called large-scale day trade level, which is essentially can be traded once or twice a day, looking to maximize the swing between the highs and lows of the day. It can, based on how choppy the market is, it can happen 1, 2, or 3 times a day, or even more, based on how the market receives it. Essentially, when it moves in that manner, it's essentially bound by a trading range within that day. It's not a ranging market. So the medium scale day trading level is trading somewhere in between the major swings of the day to catch the sub support and resistance levels, as well as the candlestick formations, right? Trading off of support and resistance trading idea. So the small and micro are looking at just a single candle and what the single candle does within a day. So the immediate description right here is this, the idea one, right? Essentially what it will do is the candle will, without a wick, start to climb up with momentum. So when I take advantage of that, I have sufficient size to enter at this point and then sell at a point where there is a decrease in the momentum to the direction that my thesis is projected to be. Okay, and I've seen these things occur, work well, and it can go the other way, and so that has to be carefully weighed to the risk and the reward, right? So that's the idea of this small micro trading scale, right? So day trading level that also works well with support and resistance, which works well with the other levels as well, right? So the interesting thing that I've noticed about what I've seen in the past as I traded is that I would see this candle, and I've fallen victim to this numerous times, and the reality is what most of the time happens is at the first level, as at first blush, when I look at this, the candle is moving up. It looks like it's going to keep going up. But what it will do is, despite the fact that it has this large candle moving up, there is a wall that it runs into. It's called a resistance. And as soon as it hits that resistance, this momentum move up stops in its tracks. But when I look at it, it has already created a bullish trend within that single candle. And the initial instinct is to get in and ride it up. However, what happens is the next candle is painted and it starts to go down because it's ran right into resistance and it'll pull back. There is a pullback at these ranges. It varies on the size of the interest in the pullback, and it's possible that it will just punch right through, but that there's a statistical probability associated with how many times it moves up, how many times it moves down. And generally speaking, when the conditions are right, based on how it behaves, is that it slowly goes up, that's strong. And then this seems to suggest that, okay, finally, I'm going to do a flush, essentially. Flush the market. Gets up to this point and starts to drop down. That's how it works. Okay, so essentially when there's a statistical basis that says, okay, things want to stay inside the trading range 80% of the time and 20% of the time, it's going to break out. That's how it makes sense. So here's the area here's the medium scale day trade area level where I spent most of my trading days here. And And so here's one of the techniques that I use. This is a breakout strategy. The breakout strategy is essentially is moving to another trading range. Essentially, that's what it is. Because what it would do is it'll be in a trading range, and there would be a abrupt change here based on the consolidation at this point, and then changing the direction after a while. And then the indication is this candle that foretells what will happen, and then it'll go up to the next resistance area where certain interactions will occur, either to continue or to reverse or move sideways. Generally speaking, when it moves at a certain level, because of this medium scale day trade level, strategy is to exit the trade on a choppy day. But if it's a trendy day, which happens once in a while, maybe one day out of 5 days, then it's going to continue. That's when I say after I sell that, I sold too soon kind of thing. So trade range, support, and resistance. Support and resistance within the trading range. I've seen this before. I can trade this, I can trade that. Even if I get in here, I just wait, it comes back. Even if I buy here, it comes back down and moves back up. If my gain is not acceptable, then that's what I do. I have time. That's essentially what it boils down to. So the third part is called the continuation and stair-step kind of situation, which is just talking about which is moving up. So essentially here, that's the first part. Second part is trading range. Now continuation is there's obviously several different ways of doing it. Smooth continuation, stair-step continuation. Okay, stair-step step. So get in anytime and just ride it up as the smooth way. But the stair-step is a difficult way to trade, because what happens is essentially it goes down. Okay, we're looking at this type 1 and type 2. Essentially, what it would do is it drops down to a certain level, and then it starts to pull back, profit taking probably, and then starts to sell off at this point here, right? So if I got in here thinking that it's going to be moving up, if this candle 1, this is candle 2 and candle 3, by candle number 4, I'm too late. It's already below where I bought in. That's typically how it ends up. And what I need to be is conscious of what this happens, so that when I have sized in to take advantage of this and reversed, then I can exit the trade as soon as possible. So this is a continuation trade that I can make. So these are the two types that I can look into. I mean, could there be anything else, right? So I can so when the market is very tight, chances of making money on this is making a positive return on this is slim, because this could be candle 1, candle 2, and then immediately drop and continue on its move down. So the other part is continuation breakout. Okay, so this is essentially breakout of this current situation in the downside, right? Go right along with the trend. That's what I need to do. The other part of that I need to consider is in between trades. So I have an idea what to do in this region and this region, but what do you do in this region? Just stay out, or you can use candle formations to see how I can trade this. Is it a continuation, or is it going to reverse kind of a way, right? So now That's section. So now I'm going to expound upon. So what it turns out then is that if 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 trending up and trending sideways is a given, then the hard part is trading the trending down days. That's the hard part. So I will expand upon that. I'm gonna make a section of it, and so in section 18, I'm gonna make a special section of it. Trading the stair-step downtrending this chart. I gotta get familiar with this. If I'm going to change this, that's what I need to do.